Welcome back to Converge. It is the top of July. I've got a great guest with us today, and Alanna. Great to have you too. Alanna is my co-host, as you may know, the head of global strategic partnerships and alliances at Convera. I am Alex Lawrence, the head of content at Convera. And today we're joined by Sammy Chowdhury. Sam, thanks for being here. Do you go by Sammy or Sam?
Sammy is good. Thanks, Alex.
Sammy, yeah, no, good to have you. Alanna, you guys have met before. You go back a little ways. Why don't you give us the lowdown and start out with some getting to know you with Sammy?
Sure. Yep. So prior days kind of working at a token vault, focusing a lot of PCI compliance scope stuff. Sammy and I work together, right, on behalf of some of the shared end customers. And he and his firm would, kind of cover off some of the QSA duties that our shared end clients needed, some of the CPA stuff around SOC 2. And, I guess we can ask Sammy, right, of all of the end customers that he works with now today, tell us a little about, kind of co-founding Prescient Security and, kind of what, I guess, your core focus is, right? Like for the engagements, what type of end customers do you work with today?
Awesome. Thank you so much, Alanna, for inviting me and being part of this great conversation. Thanks, Alex, for putting this together. So I co-founded Prescient Security with Fabrice, who is my co-founder for almost 17 years now. This is our kind of fourth rodeo in doing security and technology setup and entrepreneurial ventures. Our core focus today is to simplify security and compliance for all, right? So we try to really look at, app security by, obscurity, if you will, and then try to really water it down to a lot of the founders that are building great technologies in this space. So today we support over 5,000 tech startups globally in achieving their security and compliance goals. So whether it's payments, FinTech, health tech, you name it, we help them through that journey.
That's exciting. So that being said, right, because a lot of these paytechs, fintechs, they're not necessarily licensed on their own. They have correspondent banks and, all sorts of other licenses through partners, right, that they're operating in. What do you think, kind of based on the exposure today and who you're working with, what's the most misunderstood aspect of payment data security among these fintech startups, right? And I know you work with like A16Z, Y Combinator, some of the most innovative companies, right? What's the most misunderstood aspect that you would say around payment data security?
No, absolutely. So most founders think that if they have tokenization or PCI scope reduction, they have achieved full compliance. But it's not, right? So the attack surface is completely changing with the or introduction of AI. The business logics are changing. So the way we used to abuse and attack, applications and to fortify the security of those applications also are changing, right? So now, security isn't about just encrypting data. It's about really protecting the keys, right? And making sure that we're following the players and the actors as well as the third parties. And we'll talk about that in a bit.
Yeah. So say, you're advising, and I know you work with big FIs and, all of that specifically on the security, pen testing even side. Say you're advising Convera, right? Like annually we do 200 billion, TPV. What layered security controls would you prioritize, right, against wire fraud and then specifically insider threats, since we all know that's typically how it starts?
Yeah. Oh, very good question. So when you think about layered security, you have architectural patterns related to, 7 layers as we follow in information security. So you think about behavioral biometrics, anomaly detection on, wire initiations, right? So that could be one. Segregation of duties come to mind. It's an old-fashioned, control that still works today, especially on transactional workflows. Privilege access management would be an important one. We don't really pay attention to privileged users because they have privileges, right? So we get spooked by, like, am I gonna go after the CEO, right? Context reach audit logs is a new concept that that goes beyond traditional logging and reviewing those logs to make sure that we keep them tamper proofed, as well as out of band transactions. Verification of those would be super important in the context of layer security. So uh, again, it's a complex set of patterns that we are monitoring and trying to protect every day.
That makes sense. And we'll get to, kind of connectors and third-party risk management and partnerships, I'm sure. But that brings up a good point, right? Because it's like the age of consolidation and everybody, finance, treasury teams want to work in a single pane of glass, right? So it's like there's embedded everything, embedded, finance, right? Embedded payments, like inside of the native SaaS or ERPs. And then that way you have your audit ready environment. So you must have your work cut out for you because you probably have to go so many layers deep and even figure out, okay, what does the ERP access look like? Is that an Active Directory integration, right? Is there privilege access management there? Because they can touch the payment. So all such interesting stuff. So I guess if we're going to talk about kind of the SOC 2 aspect, right? Like a lot of the fintechs, right? They want SOC 2 so that they can kind of work with larger partners, connect to card networks, and then the global standard ISO 27001. What are the top failures around like SOC 2, Type 1, Type 2, or ISO 27K1, the control failures, right, that you've seen handling high volume transactions?
Yeah, no, happy to add um, some more kind of color to SOC 2 specifically, let's say, which is used by majority of the US based tech companies working with large enterprises. So within SOC 2, which is a descriptive framework, not a prescriptive one. So it doesn't have its own set of controls. You can take the ISO 27000 controls and map to a SOC 2 standard. But the traditional kind of principles of change management is typically lacking in dev shops who are pushing changes, margining without an approval. We find that a lot, unfortunately. Sometimes they don't even follow their own exception policy of getting it approved by the CTO if they're pushing emergency changes. So change management is still a great, I would say, area of weakness for most of our tech company clients. The next one would be access review. Most of our clients don't even know how many applications they have access to in a API heavy world. So doing a proper access review in terms of who has access to what, when, and how, and when whether they should even have access in the first place is very difficult exercise that we see a lot of gaps in, right? And the third one would be around the human aspect, right? The human firewall, as I would call it. The security trainings are required for SOC 2, but phishing is not. So that's why I call SOC 2 as a checkbox, unless you work with the auditor who really focuses on the layered security architecture, and really focused on building better security posture for you as opposed to just checking the box on a standard. Phishing is important. Phishing test and followed by a training for those who are failing that would be super important in any organization. That's how the bad guys are coming in. Half the time, the other half the time they're gonna come through the third parties.
That makes sense. Alex, you want to cover off some compliance?
Yeah, let's move over to
AML?
compliance, AML, third-party risk topics. So how do you evaluate a typical TradFi or legacy cross-border compliance stack? I mean, that's obviously the space in which Convera has operated as we continue to modernize against those fast-evolving AML regulations and sanction screening obligations. What stands out in that type of evaluation?
Yeah, it's an interesting space, right? So most TradFi stacks are designed for volume, not for velocity, right? So their screening often lacks, real-time triggers, contextual matching, even synthetic ID detection. So if you look at like the latency of alerts, OFAC, checks, even like link analysis capabilities, it takes time for us to evolve to, typologies like crypto laundering and nested correspondent, banks. It is a complex kind of web of, attack patterns that you can observe there. And so as you start getting more into, DeFi and TradFi, you first of all you need to really get yourself educated on the emerging technologies and the operating models, and then start building controls to protect those new models.
Yeah, you sort of answered my thought there, which was how do decentralized systems that run on blockchains or stablecoin rails shift that conversation around compliance and security. I don't know if you have any other color to add there in terms of the way Prescient is positioning itself to advise in that sort of new rails, new world, um, universe that we're moving into as things move on chain and more transactions are conducted on chain.
Yeah, absolutely. So we recently partnered with Node Operator Risk Standard, team called NORS. So they're essentially a set of standards or security standards for stakers, right, on Ethereum blockchain, or now they're going multi-chain with Sol and others as well. And so we provide this targeted security assessments for all the validators on the blocks, and making sure that they have anti-slashing, key management, some basic recovery and backups and controls in place. I think that's a great start for self-regulating. It's essentially a bunch of stakers came together and decided that they have high-risk validators on their and that could lead to like correlational risk if all of them failed, worse than the slashing risk, which is not that much. And so they can lose all of their collateral, right? Everything that they're staking could be gone. So they're reaching out to independent, validators or assessors and auditors like us to come in and really validate the basic, security controls. So I think that's a great step towards the right direction, because we don't have a lot of regulations in this space, as you know.
Right. Yeah, it's kind of a moving target, right? And as everybody moves towards this technology, it's like, what's the total cost of ownership going to look like?
Yeah, even stablecoin, since you mentioned, AICPA is working on, putting out their first standard. So looking forward to getting that, and getting that going for our clients too.
That's awesome. You can report back. We won't be able to read it.
No, we'll try to simplify and make for all those complex standards. But
Yeah. So I'm assuming, right, that most of your portfolio that you work with, if they're FinTech, they're kind of building in the cloud, and for the most part, cloud native. For like a Paytech or a FinTech using, AWS, Azure, GCP, whatever, public cloud, for either payment orchestration, right, or some sort of dynamic routing even. What benchmarks, would you use, right, to assess the cloud hardening posture, like CIS, NIST, like what, tell me a little bit about kind of the security in the cloud versus on the cloud, right, that the public cloud provider is covers off.
yeah, no, absolutely. So CIS, version 8 has good benchmarks that they're automatically applied, by the most of the cloud service providers these days anyway. But you need to confirm that they're being applied to, your operating systems that are being spun up and then, disappearing, right?
Oh.
So and if you have function as a service, you have containerized infrastructure, clustered infrastructures. You need to have CloudTrail, CloudWatch on so you can actually validate those benchmarks are in place, and those hardening standards are applied. So I think it's auditing or internal auditing or self-auditing. Those best practices should be just 101 for any infrastructure team in any fintech space.
So basically, how would you test it, right? Like infrastructure as code or pipeline security and a continuous delivery model used by the B2B fintechs. I mean, how would you pressure test the CI/CD pipelines?
Yeah, so I think the first problem that we see in CI/CD pipeline is secrets, right? The secrets being are leaking out because it's part of the code. They will hard code some API keys and
Yep.
so hard coded credentials should be protected through AWS has its own secrets manager that you should be able to use. So we look for those controls being in place. If they're not in place, we know that there is going to be issues, right, in the
Right.
code base. Check for immutable bills and tag integrity is another good practice. Looking for change management controls like approval gates before deploying into production, automated tests like SAST or static analysis, DAST or dynamic analysis of your code base would be very important. Dependency checks, Dependabot, and using some of those tools would be important. So if you don't have any SIEM tools that are getting alerts and logs from CI/CD pipeline, then you should have better monitoring overall. And those are some of the controls that we look for when we evaluate CI/CD pipelines.
Okay. So that's related, right, to the kind of cloud infrastructure that the products and everything run on. Are there specific product architecture implications around CI/CD pipelines, right, that are automated for product code?
Yeah, absolutely. So the big problem in applying global payment companies would be the regional kind of differences, right? Jurisdictions. Every jurisdiction has its own set of rules and regulations. So if you don't have what we call, region-aware deployment strategies, then you're going to run into a lot of non-compliant infrastructures. So you should be able to also have rollback for resiliency, and then just overall availability concerns, right? Whether you have multi-region availability to your infrastructure, which is mandated by DORA, which is Digital Operational Resiliency Act in Europe. So looking at those regulatory compliance requirements, but more so best practices in multi-region, multi-geography concerns should be important.
That makes sense. That definitely makes sense. And then it's like the payment data, right? Like there's a certain, depending on regions, right? There's on soiling and all sorts of stuff, right? Related to kind of even PII that can be in really robust payment data sets. So I'm sure that can get super complicated. Okay, so switching gears, right? Everybody wants to talk about AI, ML. Yeah.
Should
I'm
we get
sure
this
you
question?
do. So we might as well kick that door open. So what are your thoughts, right, for using AI ML for real-time fraud scoring in B2B payments or transactional fraud even?
Yeah, so I think AI ML would be extremely helpful in fraud detection. They have been for a very long time, by the way. Not even recently with the generative AI, explosion, but we have been using AI ML in fraud detection for some time through, I would say, adversarial machine learning, type of risks that we covered. And bias is a big problem in many of these models. So uh, how do you not train the model in a way that you train the bad behavior, if you will, right? It's just
Yeah.
like any other kid, right? If you teach them the wrong things, they will do the wrong things, right? So they're not inherently moral and ethical. So we need to think about building socially responsible, transparent, explainable models when we're applying them to fraud scoring as well. And because it shouldn't be biased towards a specific, gender or race, and there are some, issues around that. But more importantly, I would say, so long you don't have black box models like we had in the 2008 financial
Right.
collapse, when a lot of the Wall Street models predicted the wrong things, and we ended up in a really bad spot. So having good documentation, having around what you're putting in the input data would be important. So to me, data governance comes to mind when it
Yeah.
comes to building any AI ML based system for payments or other use cases. Good data hygiene is super important. If your data is clean, your model is gonna produce highly effective results.
Yeah. Yeah, it's like I think AWS just launched a clean room or something that like people are sharing like data and stuff with too. It's really interesting, some of the innovation now, so that they can like kind of fabricate the models and train them. And um so what about the GPT like agents, right? Can they assist in reviewing AML alerts, right? Or compliance evidence in high volume paytechs or fintech environments?
Absolutely. So generative AI, does great summarization, as we know, right? We don't want to read too much. We want to get the gist and move on. So same concept. If you have so many SARs, right, that are being issued to these AML teams and KYC teams, they're overwhelmed with the volume. So it's very important to focus on what's important. So I think detecting high priorities, detecting inconsistencies, duplicates, those types of data related issues could be overcome very easily if you have GPT-like agents that you're applying to SAR review, so you can complete those compliance reviews much faster than what have seen in the past.
So you basically just apply like rules and logic, right? Set to flag, and then it'll flag it automatically, and then a human can do the final check.
Yeah, absolutely. So we're using GPT-4o in our audit firm for AI, based audit scanning of evidence. So we get, on an average, let's say 80 controls, we get about 800 pieces of evidence, right, that we need to run through. So manually, if we go through 800 pieces of evidence, it will take a long time. So
Right.
we run the AI audit scan to make sure that it flags all the false positives, false negatives, that wrong evidence, and then we want to make sure that we mark up all the evidence to get to the right place. So when we're reviewing those results, we're getting right to where we need to be, right, as opposed to reading a long policy document. We know where we need to focus on, where the problems could be. So it's a time saver, significant time saver. If not, it is making us much more efficient, and also identifying blind spots that we may have, because we may not be expert in all topics, right? So I have an auditor who is not expert in, let's say, lambdas, right? Now we're looking at a piece of evidence that is a configuration for function as a service. So then they don't know what they're looking at. Now the AI will write up a nice kind of explanation and summary around like what it thinks is happening here. So it does help tremendously, I think, to close the knowledge gap, as well as to detect any kind of blind spots.
That's interesting. So it's like contextual, like prompts almost, right? It's like, what are all these lambdas doing?
Yeah, we cannot retain our client data for AI scan, and we also cannot train on client data. So we have limitations. So we don't
Right.
use reasoning model that takes forever to go through. So we use 4.0 as opposed to 4.1. Why? Because we want to make sure that we get through them fast, and then we kill the droplet as soon as we run this the process, or get the input or the
Yeah.
response from that. And then we use heavy prompt engineering, because we cannot train the model. So we want our model to think like an auditor, but we don't want the model to make decisions, if it makes sense.
Right. Yeah, that does make sense.
So if it starts making decisions for you and I, it's gonna start hallucinating and make all kinds of crazy decisions, and we don't want that. We want it to make decisions like you and I.
Right, right. That makes sense. All right, well, let's talk about like big, global commercial fintechs or MSBs. Convera kind of has its own native network that's been built up over 40 years, right? So we're lucky in this way that we have this modular infrastructure that partners and clients can kind of plug and play into. But say you're working with like an MSB, right? And they want to expand into like one of the, emerging hypergrowth markets like Africa, LATAM, right? Or MENA. Um, what security or like regulatory due diligence would you recommend they complete first?
Yeah. So I would start with KYC, right? That's a very important. So look at, validate your local banking partners, KYC and AML maturity would be important. Look at the jurisdictional, risk scoring from the FATF, grading system, right? And other local fintech regulations. Look at export control laws, so you're not getting in trouble with your own government, right? Related to encryption, like DOJ has, countries where you shouldn't be doing transactions with,
Yeah,
right?
there's
So
some sanctioned places these days.
absolutely. So regulatory licensing path, whether it's EMI, PSP, VASP, and others, right? Depending on the country, I would keep those things in mind while we're planning for expansion in emerging markets. It could
And
be highly I think lucrative, but risky for sure.
Yeah. And I think that's like a good call out when you said KYC. I don't think like when fintechs launch, right, especially most are like, US based, there's great like US KYC vendors purpose built for this. But I don't think people understand how incredibly arduous like global KYC is, right? And regionalized KYC and being able to kind of keep that clean and keep that compliant. And I know specifically, right, with Convera, because we run some high risk as well. There's a certain amount of high risk business that we also do, which has, kind of different implication. But even just like global bank account validation, right, solutions, it's like there isn't necessarily one that is excellent at everywhere, right? And that is so nuanced. So you must have your work cut out for you, because I imagine they come to you with this like kind of Frankenstein of like third parties that they've layered in, and you're probably like, what's happening here? So I guess related to licensing requirements, right? What's your view, like an MSB or an EMI or a PSD2, right? Across large cross-border, provider jurisdictions. I mean, how should security leaders, right, that kind of are at the helm of these global commercial fintechs, how should they support the expansion, right? I know you covered off some of them, but do they typically come to you? Is it like a firm? Do they have to do something internally? Tell us what that process looks like for our listeners.
Yes, no, happy to. So for licensing requirements across regions, right, you need to keep in mind, things like policy alignment, right? So if you have encryption, fraud reporting, incident reporting, information security policies in general, if you don't have alignment with your partners, then there is an issue, right? So threat modeling, regulatory reviews are important. Technical documentation for audits. So what do they have? Like what they have gone through. So we need to look at those as well. Securities is now kind of a gatekeeper for licensing process.
Yeah.
It hurts me to think about security as a roadblock, but I think it's necessary to make sure that we are getting into a more secure relationship, if that's even the right thing to say.
Yeah. No, 100%, right? Especially kind of this large volume B2B money movement. And like we said, it's, embedded everything like 3 layers down and across inside SaaS that's completely unlicensed the majority of the time, right?
Absolutely.
I just want to, close things out on our favorite topic of AI, just to keep people, awake through the end of the episode here. I'm just kidding. But if we bring it back to AI, at least we know we'll have some people who, at least stay tuned. So, Sammy, if we're talking about ISO 42001, which is the reference framework for AI governance that companies can implement to create a baseline of controls and managing AI specific risks, how can fintech companies like Convera create board-ready AI risk registers that align with this new standard? What's your advice there as this begins to roll out more broadly?
Yeah, no, I think that's a very relevant question. And, we audit foundational models, big ones, right, that you know of every day, as well as companies that are integrating AI models that are into their business delivery, as well as payments and complex financial transaction architectures. I think the few metrics that you can track would be things like time to detect and respond to real time fraud and threat, right? Third party dependency exposure should be a good metric to follow. Budget to revenue ratio, right? Security budget to revenue ratio is a good one, because end of the day, we have to prove our return on investment on every dollar we spend on controls. So we can't just talk about high, medium, and low always in security. It has to be dollars and cents, and so yeah, I mean, residual risks across payments corridors, like risk rating by like jurisdiction would be important, especially if you have a global payment network. And so those are important metrics that you should be keeping in mind when you're designing sort of management system, whether it's AI or information security or others, doesn't matter. Those are important considerations. And plus, the ones that we talked about earlier, right, around transparency, explainability, social responsibility, or responsible AI. Because at the end of the day, if you're violating laws while using AI, it's just a collateral risk, right? You took someone else's information and applied. So it's important to keep kind of attribution risk in mind.
Yeah, that's great. No, important thoughts to carry forward into the AI governance era that we're entering now. Thanks so much, Sammy. This was great. I know that covered a lot of topics. We could go deeper in many areas. Maybe that's for another conversation down the road, but appreciate your time and wish you all the best for a successful second half of the year.
Yes, it was so good to catch up, and I'm sure we'll be talking soon.
Thank you so much, Alex and Alanna, and looking forward to having many more of this in future.
Yes.
Yeah, our pleasure, Sammy. Thank you.
Take care.